having a small trading account is not possible to go to 100,000.
Oh, are you going to do it, Eivind?
I will prove you wrong, sir.
Please do it. That would be incredible. $10 a.m. here, we had ISM manufacturing numbers as well as ISM manufacturing prices. Now, what you've got here is you've got a hotter than expected number, and this just adds sugar to this already very sweet upside to the dollar. Take a look at this dollar index, guys. The dollar index is just on a roaring uptrend. And if you've been watching the show for a while, if you're a regular viewer, if you're someone who pays close attention to what we talk about, you know this is not a surprise. We have been trading this trend. We have been fundamentally and technically bullish on the dollar in the last few weeks. And it looks like the dollar is set to potentially put in its 13th week in a row, potentially bullish. Now, again, we are just early on in the week. We just got started, but this is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. I'm sorry, maybe it's 12. Maybe I counted that wrong. You get the point. This is an incredibly bullish dollar, and it does not seem to want to quit. The hard part for a lot of traders is that it's very hard for newer traders to accept that a market can move in one direction a lot longer than people think. A lot of traders, they approach the markets thinking, well, this market's gone up, it's time to come down. It's just not always the case. And that one time where it does keep going, that's what wipes out a lot of traders who are trading over leverage with no stop loss, that sort of thing. Let's talk about this market, guys. What is up? What is going on? What is poised to move higher and lower in October? I've got so much to talk about with you guys. Today is going to be a long stream. It is our first October themed stream. And again, the quality of the video is low. Is anybody else experiencing low video quality, or is that just Sia Trades? Let me know in the chat, guys, if everything is okay. It looks okay on my end, but please let me know. Hope the intro stays. Don't worry. We've got that intro running the whole month. We've got more fun stuff coming for you in the month of October, and we'll keep you up to date on that. We've got lots of cool giveaways and prizes. This is possibly some of the most fun times of the year for us here at A1 Trading. We love theming the streams, and you could just imagine we have tons of plans to keep it fun. Low video, intraday, clearly, okay. Can anybody see me clearly? If anybody can see me clearly, then it is probably not on my end, but please just let me know. Eivind says, when am I coming on? Eivind, you can come on in, let's say you want to do 10:30. The reason we push back the stream is because we have some stuff we want to do later on in the stream. So anyways, let's get into some charts, guys. Eivind, just speak with Chandler. I think he should be able to coordinate you coming on. Okay, cool. Your screen is blurred. Can't read graph clearly. All clear over here. Okay, if one person's clear, then that's all good. Because if one person's clear, then it's probably not my end. Yeah, you're okay. Okay, some people are saying it looks clear. For the people who are having issues, I would imagine maybe just make sure your internet is all right. And yeah, let's keep going. Anyways, dollar index, guys, big resistance point here as we come into the ISM manufacturing data, which did look relatively strong for the dollar. This is a dollar trend that has already been playing out. So it needs, to continue uptrends like this, you need strong data points, you need strong conviction. And so, we have Jerome Powell speaking in about an hour. That should be interesting to see how that potentially moves markets. And also, not to mention, you've got NFP on the horizon, guys. On Friday, the dollar index will be very volatile. So will gold indices, oil, all of it will be very volatile.
Want to stay up to date with all the latest trading information? In the description below, you'll find the link to join our free Discord. The Discord gives you instant access to lots of helpful material like free trading courses, chart analysis, updates about what's happening in the A1 community, as well as discount codes for our other products and services. The best part, all of this and more is 100% free. So go down in the description below this video and check it out for yourself. If you're interested in upgrading to the full VIP Discord featuring our team of expert traders signals, you can use the live chat link in the description to get connected with one of our team members in seconds. So don't wait, go check out the free Discord today.
Indices. What are your thoughts? If you want to share your screen again, we can pull that back up.
Yeah, okay. That was when things went south, right? So if you crash it again, then it crashes again.
Okay.
But yeah, I bought a bottom on paper trading, but also in my other account. And my other account, dear Nick, inspired me a bit because you said over the weekend that having a small trading account is not possible to go to 100,000.
Oh, are you going to do it, Eivind?
I will prove you wrong, sir.
Please do it. That would be incredible if you traded it up to a massive number. I would praise you.
So I started for the 691. I just found some random money somewhere.
Okay,
so I will link it up to my FX book somewhere. But yeah, I'll try.
Cool.
I'll try the challenge.
$100 to 100K. That's easy. Anyways, so Eivind, let's get back to this indices concept because I want to, if you'll let me, challenge you a little bit on the indices. So here's the thing. I'm kind of mixed because on one hand, like I was mentioning, to support the idea of bullish on indices, the Q4 is really strong in terms of revenues for major companies. And that's why we generally see a lot of stock positive growth and earnings seasons coming around. So there is that possibility that is a driver to the upside for stocks. And if I'm being transparent or I'm being honest, I hope that earnings are just great and stocks go up because I'm positioned in stocks in my options plays and in terms of stuff as well. So the concern that I have is yields going higher. It is a continued pressure on the stock market. People are going to be increasingly, as this yield goes higher, every time this goes higher, big money looks at it and they say, well, I could stick my money for 5% passively for my clients, right? Hedge funds, big money managers, they have that option available to them. Whereas that option used to not exist. For many years, we lived in an environment where interest rates were near zero and there was no, the bond market was like totally untouchable for really trying to get any sort of significant yield. Now, 5% is not significant, but it is increasingly an option. And then the other kind of condition there is that the consumer spending is shrinking. It's hurt. We have credit card debt is rising. We also have a consumer that has also been hurt in some ways by the resumption of student loan interest accumulating. So I'm not necessarily bearish on indices either. I don't like to short the indices, but I wonder if despite the seasonal trends, if some of those factors could work against. We're now in an environment where QT is kind of going on. I don't know. What do you think, Eivind? Does any of that bother anything about what you think?
What are you talking about? You're talking like a bit of a retail trader here. Let me arrest you a couple of things. The rise in 10-year T-note is not a driver in itself. It's a symptom of something. It's a symptom of a sick economy. S&P 500 going down is a symptom of a sick economy. So it's just an indicator of what the market thinks the inflation is going to be and the risk premium that's being added to US bonds, which also comes down to is the government going to still stay and pay their bills? That is also a part of the deal. So they're all wondering about what Fed is going to do next, how inflation is going to be. PCE came down, PMI came now much better than I expected at 49, even though below 50. But we're coming into Christmas. We're going into Halloween. We're going into Thanksgiving. We're going into a season of spending, and I don't think that people don't have money, even though their deposits has risen. People still will spend money. So even though the outlook is, or the current situation isn't positive, it's still not completely dark. But also, if it was completely dark, S&P 500 would have been at 4,000 or 3,005.
You're right. And Eivind, I say those things not necessarily because I just starkly disagree with you. I think that like you pointed out, earnings relatively strong. And I love what you said. That was a wonderful point about the 10-year, because the yields rising does not necessarily mean stock market bear, because the yield rising is also, as you mentioned, it's a product of an economy that is relatively strong. It's not like the US economy. I know obviously it's hard out there for people, but relatively speaking, the economy is pretty resilient. People still have jobs and a very, very low number of unemployed people relatively to historical times. So you have all this stuff. I think, for me, I'd like to see price action change directions a little bit, and then I might be joining you on some of those trades. But I'd like to see also this week, we have NFP. That's a big indicator, really important for markets. If that job market cools down a little bit, it could be strong for stock indices as well.
So in all of this mess, I just want to penetrate and say one thing. What should you focus on? What is the real deal? Is it close down? Is it crash? Is it recession? Is it all dooms? Or is it just trickling down to carry trades on the EDGEFINDER?
I love this page too.
Make it simple. USD yen, New Zealand yen, pound yen, CAD yen, euro yen has all risen. I don't know how much this year, but if it's somewhere in the direction of 5 to 10%, the whole year of USD yen is 16, I think, so far. Another 45 today.
Yep.
Make trading simple. Don't fuzz about what happens there. So my point is about S&P 500, about stock market, I am equally scared. It just doesn't it doesn't move me, which unfortunately it does to people. I see people are like, but I thought, but that was not reality, was it?
Yeah.
Reality was that we still have an economy that's still functioning, and we have to go back down to the basics.
Yep, you're right. No, and that's the thing. You point out the carry trade scanner on the EDGEFINDER. I'm glad you found that page too, Eivind. I like that page a lot for simply, when I look for trades, if I can catch a swing that has a positive carry as well, it's very nice. And also, one thing to point out about the interest rate environment, we have short-term bias when it comes to memories in markets. And there have been plenty of times throughout history where yields and rates are high alongside very strong stock market growth as well. If the economy stays strong, theoretically, it can very much trickle into stock performance and company performance. So that could be a driver. So you've got USD JPY. Do you have an idea here on the yen?
No, yeah, I do, but that kind of went out the window. Other than buying higher highs, but just to prove that from top to bottom right now, it is 17.4%, which is a worry. I do worry when we do hit 150. I do wonder even more if we hit 152. I saw your video yesterday where you're pointing out the price peak from last year, which is 151.80 something, 90 something. It's still a way up there. But as you see, the start of the week, we are already starting high. We're already higher than the opening price. So for me, it's just a continuation. How do you get in? it depends how aggressively you want to play it out. One price is of course 149.50, or just a local higher high, higher low.
I like that. I mean, the thing with the dollar yen, you mentioned the concern in the 150s from the Bank of Japan, perhaps jumping back into currency intervention. But I generally think that, they can do what they want to do, but yields bumping up against the highs and continuing to push higher is just going to be, wind in the sail for the dollar until something changes. Again, we have Jerome Powell speaking in about 20 minutes. That could likely be market moving. We have jobs numbers at the end of the week. So these things could act to change or continue the direction of the dollar. We'll have to see. We don't know ahead of time. Somebody in the chat asked about gold. We did a full kind of discussion about gold earlier in the show, but just to reiterate some of the factors here for you guys. Yields continue to be a story. And it's funny how yields work. They're like super boring. Nobody ever cares about yields until everybody cares about yields. And we're back to the highs on the 2-year or very close to it. And so that is putting a lot of pressure. What that is telling you guys, one way to read the 2-year or the 10-year is, if I could type it right, it's telling you that interest rates are likely to stay elevated for a while. This is the marketplace for bonds, and they are saying basically bonds or yields are going to remain elevated for a period of time. But again, Eivind, you mentioned that Q4 seasonality could still be strong for stocks. I think it also actually let's check gold, because I am curious about this. Seasonally for the euro, as we go into October, we have seasonally bearishness there, but we'll pull up gold as well, because I am curious. A lot of people are probably wondering, is gold going to catch a bounce alongside that? Eivind, do you know that off the top of your head?
Say again. If gold is supposed to have a bounce now, and then fall again. But
yeah, because gold is really struggling at these levels. If you want to share your price on gold, and I've already gone through mine a couple of times, I'm curious what you have to say here.
Didn't I post like a thing yesterday? I said that, where am I? That this should be a low, 1850. Not that it has to be a low, but I want it to be a low, so that we can catch a better price and then sell. Because once you get this parabolic downtrend, which can continue on forever, it's just that day it happens, it's kind of it will probably be a very aggressive move. And what do I normally talk about? Just to mention that to people, or show what I mean. Like once you start going down in these areas here, you have much steeper pullbacks, and all of a sudden oil kicks you out, and you're wondering what did you do wrong. You sold in a very aggressive bearish market, which is unfortunate that we are in the place we are. But I definitely need a pullback or something to even consider selling it. But
I think that's generally consensus when you get a move like this. Is, even if you're bearish, whether you're bullish or bearish, if you're bearish on a move like this, I think you, as Eivind, you're mentioning, you've got to wait for some sign of a pullback, some sign of life. And then if you're bullish, probably got to wait to see some signs of life, some signs of reversal, because otherwise you're just buying something that is clearly just on a sell, a selling spree in the market. So it can be a very tricky trade to try and jump in front of something that's just, in this case, falling lower over and over. The one thing I mentioned earlier in the show, if you go to the weekly chart, maybe you have a little bit of a bounce here around 1815, 1810, somewhere in that zone. But as I mentioned, it's not something I'd put my money on. So in the short term, bearish is the consensus, and I think that that's the path of least resistance. I think we continue to see this thing go down, and a lot of traders are going to look at this and say, that's already down, it's got to come up now. And it does not. People have been saying that for days now, and they've just been getting destroyed by this thing continuing to go lower. So I think that, is there a bottom coming for gold? Maybe, But again, I'm not trying to predict that bottom per se. I would very much like to either see it truly reverse, or in my personal view, really just look for the pullback as a possible trend continuation play alongside what you're saying, Eivind. So yeah, it's a really tough trade to be long gold right now, in my opinion.
Yeah, also, I'm not necessarily talking long gold. I'm just talking, what do you do?
Yeah, right, exactly.
How, like, what is your what setups do you want to be in? And I had a discussion with people, one guy in Discord yesterday, and the what I kind of see people lack is, well, I want people to start buying like in this area, like higher high, higher low after reversal. Good reversal, by the way. But what I normally see, I see traders having like entries, buys when we are this late, where it's a third pullback, and we are what, 400 pips up or whatever. It's far away from where the bullish momentum started. So just have a very specific plan of what you want to look for. That's why I'm not even bothered about looking at gold. I would have looked at it for 2 seconds and then left, because this is bearish. Like, it's bearish and falling, and there's nothing like that. So unless it was at 1860, then we can discuss, is that a good place to start selling? Yeah, maybe. But it's more of be very precise and have a very clear understanding of what you should do, more than just, oh, it is moving.
Right. And sadly, the average newer trader right now is getting destroyed by this gold move. And I can show you guys this if we show my screen for a second, just to pull. What's cool is we have this data on the EDGEFINDER as well. We can just go to commodities. We've added that. So gold, look at this, guys. So just to prove to you, again, when we talk about these strategies and ideas, Eivind and I, we've been doing this for a long time, and we've actually been doing these streams together for a long time as well now. And one thing that has been so consistent about retail psychology, retail trading, we don't get fancy. We don't, keep it really simple. When the market is trending lower, no matter how many times we point this out and how clearly visible it is, this is what retail traders typically do. When the market is sinking, like we see right now, retail traders are caught again and again in terrible positions. 74% of retail traders on the data that we have here, which is pulled from a couple different brokerages, is they're bullish. They're holding longs, they're buying, they're getting stopped out, they're getting crushed. It's a really tough time in the markets. Same with Australian dollar, etc. What we're seeing here, guys, is that when a market is trending lower like this, be so careful going against the flow of traffic. It's not, it's so interesting how the human brain works. We want to be contrarian because that feels cooler, right? If it's dropping like crazy, you're like, I got to buy it. And if it's shooting to the upside, you're like, I got to be the one to sell the top. And you look at the stats, you look at the numbers, no wonder retail traders get crushed. They're always on the wrong side of wonderful moves in the market.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free EDGEFINDER, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.